Hello everyone, welcome back to our direct taxation exemption series. This is our lecture number 6. First, we are going to revise whatever we have studied till now. So, starting with the PGBP chapter, first section was the section number 28 that talks about the chargeability of any income to be taxed under the head PGBP. So, what are those points? See, first point was very clear that the profits and gains of any business, whether it is legal or illegal, any business or any profession, it is going to be taxed any time in the year. So, if you have operated a business or profession for one day in a year as well, then also it is be taxable under the head PGBP. Export incentive. What are the export incentives? Import entitlement license, okay, assistance or duty drawbacks. The value of any benefits or perquisites arising from any business or profession. It should be arise from any business or profession. As you know that the benefits and the perquisites, as you have already studied in the intermediate as well, so those are those relating to what the salaries head, not the PGBP head. So if you are carrying out any, if you are earning any benefits or perquisites from any business or profession, then only it is going to be taxed under the head PGBP, whether it is convertible into money or not, in cash, kind, partly paid in cash, partly paid in kind. You know that I have given the example of what commission agent of LIC. I hope you remember or recall those points. Okay, now any interest, salary, bonus, commission, remuneration of a partner to a from a firm, of a partner from a firm, means if a firm is giving to a partner whatever by whatever name called, say interest, salary, bonus, commission, remuneration, all these are going to be taxed under the head PGBP, because if because there is no employer employee relationship between the partner and the firm. Okay, but definitely it is going to be up to the certain limit which is described under the section 40 subsection B. Okay, 40 clause B. Now, income derived by trade professional association for specific services performed for its members. Do you remember Mr. Ram Jethmalani ji case? There was a J association for the to J association. I have given the money so that they can approach Mr. Ram Jethmalani ji, and they can agree that Mr. Ram Jethmalani will fight my case against the XYZ incorporation. Understood that? Okay. Now, any sum received under the keyman insurance policy, including the bonus. Bonus is also included. So, if there is a person, okay, if there is a company who have taken the insurance of a keyman, of the keyman of that company, who is the keyman? Suppose CEO, COO. These are what? These are the keyman, the crucial person of the company. Okay, if they have taken what keyman insurance policy, and that keyman insurance policy after the maturity received by whom? Received by the company itself, then it is going to be taxed under the head PGP. But if it is received by whom? By the keyman itself, then it is a salary. And if it is received by whom? By the legal heir of the keyman, then it is going to be taxed under the head other sources. Then any sum received or receivable in cash or kind under an agreement. Do you know that the Tata Steels has modified the agreement from 30 days to 45 days? Do you remember that example? The non-compete fees. Okay, Mr. Iyer, see, the non-sharing fees was the example of Mr. Iyer, okay, who have developed some patent. Okay, for that, non-sharing fees will be applicable, and non-compete fees is also applicable for that purpose. Do you know? Understand? Now, provided such sum shall not be taxable to tax under the head PG, under the head capital gain. Any of the sum is taxable under the head capital gains, then if any sum is taxable under the head capital gain, then non-compete fees or non-sharing fees is not going to be taxed under the head PGBP. For taxing under the head PGBP, it is must that your that particular income must not be taxable under the head PG if capital gains. Understood? Then Ferromatic Milligron India Private Limited, which says that if there is a payment of a non-compete fees, then it is in the nature of intangible assets and it is eligible for depreciation. That we already seen that intangible asset is depreciated at the rate of 25%. Okay. Now, any compensation in connection with the termination of modification of the terms and contract of any contract. Okay, terms and condition. If you are modifying or terminating any terms of condition of any contract in relation to what? Business. Okay, and for the If you are paying any compensation, then it is going to be taxed under the head PGBP. For this, Tata Steel's example was given. Okay, Tata Steel example was given to you. Now, profits and gains arising from conversion of inventory to capital assets. Okay, we will see it in the capital gains chapter. Now we have come to the definition of a speculative transaction. What are the speculative transaction? That are the transaction for purchase and sale of any commodity, including stock and shares. But there is additional one condition that needs to be fulfilled simultaneously. Okay, which settled ultimately otherwise than by actual delivery, means it should be settled by what? Price difference. If both these conditions are satisfied, then only it is going to be what? Speculative transaction. But there are certain transactions which the government do not deem as a speculative transaction. What are those transactions? First was the hedging contract, second was forward contract, and by modernizing the forward contract, what comes in? The derivative contract, where the two points come, what? Futures and options. And at the last, if you are trading in any what? Commodity derivatives through recognized stock exchange, on which CTT is paid, now according to the explanation number 73, what it says, that if you have one business, and in that particular business you are doing 30% speculative nature of business and 70% normal. So whatever you are earning is only 30% will be your business, 30% will be treated as speculative business, and other 70% will be treated as normal business. Not the whole business is to be treated as speculative business. Understood that there should be a proportion, and the proportion should be taxable as a speculative or the normal business. But there are certain exceptions to it. If there is an investment company, if there is a business of banking, or if there is a person or a company whose principal business of trading in shares, then in these cases there is no speculative business. We are not going to deal it separately. Okay, we are not going to deal it separately. We will treat it as what? Normal business. We will treat it as was normal business. Now, what is the important ruling that we have discussed? That the CIT versus K and Company, the case of Delhi High Court. What was that? The K and Company has submitted some amount, okay, for obtaining the marginal money for obtaining the bank guarantee to be deposited to the state government of Sikkim to obtain what? License to produce, sorry, print and sell the lottery tickets. To print and sell the lottery tickets. Okay, on that particular deposit, if the government, if the bank has given what? Interest to it. Okay, so how those interest will be taxable? Is it taxable under the head PGP or in the IFOS head, the other sources head? So the Delhi High Court said that it is inextricably linked. The word is very important. This is inextricably linked to the business of the assessee. That is why it is going to be taxed under the head PGBP only, and not under the head IFOS. Accordingly, the decision was given by the High Court. And there was another ruling which says that if if your main objective is to let out properties, earn income from there, is your main objective, and it is written in the memorandum of association. These two conditions are must. If it is your main objective, and that main objective is written under the memorandum of association, then whatever the rental income you are earning, it is not going to be taxed under the head income from house property. It is going to be taxed under the head PGBP only. This was the case of Chennai Properties in and Investment Private Limited. Okay, investment limited, sorry. Okay, this was a Supreme Court ruling. But in the Finance Act 2024, the government has clarified, if you are renting any residential house and earning some rental income from that, then the rental income from that particular residential house is going to be taxed under the head house property and not the PGBP. So it's a rental of residential house, then it is always and always be what? The house property. But other than residential house, suppose the commercial buildings, then it is going to be taxed under the head PGBP only, according to the Cheney Properties and Investment Limited case by the Supreme Court. Then we came to the hardcore of the PGBP. What it says that section number 29 says that want to compute the PGBP, then read section 3243D. They will tell you the whole process. When we come ahead, the section number 30 says about the rent, rate, taxes, repairs, and insurance of building. Okay, so what it says, every type of revenue nature expenditures are allowed, whether it is tenant, whether it is owner, everything is allowed. But there was one condition for the capital repairs. Capital repairs. See, I have said that now that PGPP, under the head PGP, all revenue nature things are allowed. Okay, all revenue nature things are allowed unless specifically written. But but for the capital nature, everything is disallowed unless specifically written allowed. Okay, so in that particular case as well, there is any repair, the capital repairs done on the building. Suppose it is done by the tenant. So if it is done by the tenant, see, actual capital repairs are not allowed. But section number 32 says that it will be deemed building. We will deem building and you can take appreciation accordingly. And if it is done by the owner, the capital repairs was done by the owner, then the owner can capitalize it in the cost of the asset and take depreciation accordingly. Okay, municipal taxes, local taxes, insurance rate, all are allowed to each and every one. But what is the main point? The capital repairs. In same and equally on the same line, there was a section number 31 which talks about what only repairs and insurance, not the rent rates. Okay, taxes, not the rent rate taxes, only the repairs and insurance. But for whom? Machinery, plant, and furniture. The same thing is there. Someone is taken them on hire and who is the owner. All the revenue expenditures can be claimed by both the persons. Yes. All the rent and hire charges can be taken by the persons. Usually under section 31, no, but under section 37, the business expenditure where it talks about the general deductibility. Okay, understood this? Now, if there is any cost of capital repairs, if there is any cost of capital repairs, that means if there is a plant machinery or furniture and someone has incurred the cost of repair, so in actual whoever is taking them on hire or the owner, in both the cases they were not allowed. But but see, there is a point. Which is the point? For the owner, the same point is written in point section number 30, which says that capitalize the cost and take depreciation accordingly. But there was no such provision written for the hirer who have taken on hire. There is no such point written. So for the hire, is the person who have taken the assets, the machinery, plant and furniture taken on what? Hire, and have incurred any capital repairs, then it is not allowed under section 31. And same like under section 30, there was no such provision as well. So whatever capital expenditure you have incurred, it is going to be treated as what? Dead loss. Okay, now we have come to the most important point of section number 32. Section number 32 says about depreciation. What are the two conditions to claim depreciation? First, asset must be used for the business or profession purpose, not for the personal purpose. Okay, and it should be active business or the passive business. Both kind of business can be allowed. What are the passive business? Passive business, the example was fire extinguishers, okay, or the standby machineries or the emergency spare parts. Okay, for that only ready to use is allowed. For those passive use, for the passive use asset, ready to use is allowed. But for active use assets, only the put to use is allowed. Okay, the put to use word is important for the active use, and for passive use, the word is important is ready to use. Okay, is this clear? Then the second thing is that assessee must be the owner of such asset, whether wholly or partly. Wholly or partly means if there is a owner who owns the property in joint name, there are joint owners or the co-owners. So whatever their share in owning that particular asset, in that particular share only, the depreciation is allowed to both the parties or all the parties who are available in that contract. Okay, done. Whether the depreciation is allowed if the assessee is a beneficial owner, yes, it is allowed. In the case of lease, depreciation is always allowed to the lessor. Okay, and in case of a hire purchase, in case of hire purchase, the asset will be delivered to you only after the completion of the hire purchase period. But only after the completion of when you have paid the last installment. But you can claim depreciation from the very first day. Understood? Then depreciation on asset partly owned that we have already taken care of. Then point number five already discussed. Then ICTS Limited 2013 Supreme Court ruling says that it was evident from the lease agreement only that the lessor was the owner of the asset, and that is why the right to claim depreciation remains to the lessor. Okay. Now, rates of depreciation as per the WDV method, which I called was block of assets. Okay, these rates of depreciation you need to understand. Okay, now what are the important points? See, for the notes, it is mandatory to claim depreciation for all assessees. Okay, it is mandatory to claim depreciation for all assessees. You cannot say I do not want to claim depreciation. You have to claim depreciation for sure. For AP bags and mobiles, these are not computer. You have to treat it as like a plant of machinery and claim what 15% of depreciation. Now, intangible assets like know-how, patent, copyright, trademark, license fees, okay, franchisee, commission rights, okay. In all these cases, the intangible assets are applicable, and the rate accordingly for 25% is applicable. But in intangible asset, as I have said, goodwill does not cover here. Understood? Then depreciation rate for computer accessories. If there is a computer like UPS, like printers, okay, computer accessories. So for those also 40% rate is applicable. The depreciation is allowed when it is put to use, not ready to use, because ready to use is only available for the spare parts or the emergency spares. Okay, fire extinguishers wale, things like the passive use, not the active use. Now, accordingly, the plant definition was given. What will include under the plant? Plant says ship, vehicle, books, scientific apparatus, surgical, etc. used for the business or profession, but does not include what? Tea bushes, livestock, building, furniture, and if it is fittings also, then it is not covered here. There are two methods of depreciation. First is what? The WDV method, and second was the SLM method. Okay, see, Ceci, who is engaged in generation of power or generation and distribution of power. There are two things. If it is engaged in the generation and distribution of power, then he has the option to choose whether he wants to go with the SLM method or the WTV method. But for any other business, the rest all businesses will be covered under what? WTV method only. Now, what was the calculation of depreciation? See, you have to take what? Opening WTV and what? Actual cost of asset. What they are saying that actual cost of asset. Okay, we have studied the actual cost in section number 43. Okay, we have discussed all those 13 points. After only the 3 points were left. Okay, acquired during the previous year, which was acquired during the previous year, and put to use also must be in the previous year. If the acquisition and the put to use are both in the same year, then we will see what? Then we will see whether it is used for 180 days or more or less than 180 days. If it is used for less than 180 days, that is on or after 4th of October, then it is going to be, we are going to take what? Half of the depreciation. But if it is used for more than 180 days or 180 days exact, also exact 180 days is also allowed, then up to third of October is the date. Until then we can take what? Full depreciation. But open WTV will also allow what? Acquired. Actual cost of the asset is also covered. What? Acquired but not put to use. We are not taking depreciation now. But It's actual cost of the asset that we have acquired. So we have to also edit that. Less money payable. If there is any selling price of the asset, that you have to reduce it. And if you have sold out your assets on the block under the what? Slum sale, then you have to reduce that. Then it comes what? WDV before deducting the depreciation. Now you have to deduct what? Depreciation that is actually allowed based on the calculation, whether you have to do what? Half rate of depreciation or whether you have to do full rate of depreciation. Understood? Now, understood it very carefully. If the asset acquired during the current year and not put to use, then depreciation shall not be allowed to the such assets. Okay, but it should be added to the block of assets. Now, actual sale price of the asset shall be reduced and not the fair market value. What it says, actual. Whatever the actual selling price that you have earned by selling that particular asset, you have to reduce that, not the fair market value. Okay. The assessee transferred the building and actual sale price shall be reduced, not the SDV. For the case of the building, there is SDV, stamp duty value. So you have to deduct what? Actual selling price and not the fair market value, not the SDV. Understood that? Okay. Now I have said that money payables include means the selling price. Okay. In respect of what? Assets sold, discarded, demolished, destroyed in the previous year. In the previous year, and also the amount of scrap value. If you sold down the asset as a scrap, then whatever the scrap value is written, then you have to take that. Okay. Then provision to section 32(1), I have explained already that it is going to be restricted what 50% if it is used for less than 180 days in the year of acquisition itself. Now coming to the provision to section number 32 subsection 1, which talks about depreciation in case of amalgamation, demerger or taxation. In what case you have to calculate depreciation normally. Okay, we have calculated it. See, remember the example we have calculated 6 lakh rupees or 1 lakh 8,000. 7 lakh 8,000 was the calculated amount. Okay, which we have calculated normally. Then after that we have separated those depreciation. Okay, total of 7 lakh 8,000 we have depreciated into two entities. First is Sai Limited and second was Sereni Limited. Do you understand that question? If no, let me show you the question again. Okay, just give me a second. Yeah, it was the question. See, Sai Limited, 6 lakh and 1 lakh 8,000 we have bifurcated in the number of use. This asset, 1 lakh 8,000 asset was only available for 151 days in that particular previous year. Out of those 151 days, 61 days was used by whom? 61 days was used by that particular Sai Limited. And the rest 90 days out of 151 days, the asset was used for Sydney Limited. That is why 90 and 61 was taken here. Okay. And these were the bifurcated depreciation. If you see, then it comes to what? 7, 8 only. 7, 8,000 only. Now coming to the next point, which talks about additional depreciation. What is the additional depreciation talks about? See, what are the conditions of the additional depreciation? It says that if the assessee should be engaged in the business of manufacturing or of any article or thing, or in the power or in the business of generation, transmission, or distribution of power. All the three things are allowed. Whether you are solely in generation, allowed, solely in transmission, allowed, solely in distribution, allowed. Okay. Plus, you have to acquire and install what? New plant and machinery. You have to acquire and simultaneously you have to install as well the new plant and machinery. Then the additional depreciation is going to be 20% of the actual cost shall be allowed as a deduction. 20%, directly 20% is a additional cost, additional depreciation over and above what? Depreciation, the actual depreciation. And now, it is a one-time benefit only. It is a one-time benefit only. And suppose if I have acquired and installed that particular new plant and machinery for less than 180 days, then only 50% of the depreciation, additional depreciation will be allowed, and the balance 50% will be taken in the next immediately succeeding year. Okay, understood that? Additional depreciation shall not be allowed in the few cases. What are the few cases? If you have installed any second-hand plant and machinery, we are not going to allow it. Whether it is acquired in India or outside India, we are not going to allow it. Second-hand plant and machinery cut. Any machinery or plant installed in the office or in the office premise, okay, or any residential accommodations, any vehicles, ships or aircraft, or any plant or machinery of which 100% of the cost is allowed as deduction in the previous year under the head PGP. I have given you the example, section number 35. Okay, so no depreciation also allowed here. Here, no depreciation also allowed as per section 43.1. I have said that as per section 43.1, actual cost is zero. The actual cost is zero for those things. Okay, so the addition, so the depreciation is also not allowed for section number 35 only. I'm talking about. Okay, now got to the point, but before that, do you remember there are two conditions which are same like additional depreciation in section 33 AB, the tea, rubber, coffee. Remembering? What was the things? Any machinery or plant installed in any office or residential accommodation and any plant of which 100% deduction was taken. The same points were there in 33 AB as well. Okay. Now coming to the point 43.6 that we have already discussed. These are the points. Now, section number 43.1, which talks about actual cost. What will be the actual cost to the assessee? Okay, actual cost to the assessee means whatever actually the assessee has paid to that particular asset, reduced by what? Any subsidy received by from any person or authority, whether it is directly received or indirectly received. So whatever the cost beared by the assessee, whatever the cost was borne by what? The pockets of the assessee, that is only going to be what the actual asset. But suppose for that particular asset that we have secured or we have purchased, if I have paid what I have paid the or aggregate of payment, if there is a payment or aggregate of a payment in a day, a person other than by what? Account pay, check, draft, ECS, bank account transfer, okay, or such other electronic mode as I prescribed, or other UPI like Paytm, Bhim app, okay, and the NEFT transfer, all these are allowed, okay, and it exceeding what? 10,000 rupees. You have to ignore such expenditure in the calculation of what? Actual cost. Understood that? Then we came that whatever the actual cost is, see whatever the price of whatever the actual price you have paid for that particular asset plus whatever the capitalization charges. What are those charges? Like the installation charges, transport expenses, trial run, test run, taxes and duties, and the interest on loan taken on acquisition for asset. Do you know that? India 23 talks about that. Okay, trial run was conducted for that particular purpose. We have spent some expenditure. Okay. But for that thing, suppose we have earned as well something. Suppose there is a metro. For metro, there has to be a trial run. We have to see. There is a trial run. But the government said, why to waste the trial run with like without any single passenger. So they invited few peoples. Okay, they invited few peoples, buy ticket and take a test drive of what? Metro. The first person you are going to become who will travel in metro. Okay, so for that they have what? Buy some tickets. So there is any amount received on the sale of trial run product. Okay, then it is going to be reduced because it reduces your expenditure. Then if it is any subsidy or government grant received for acquisition of assets, then it is going to reduce. Then we came to what? Actual cost definition. What is the actual cost in the special cases? We have seen the actual cost in the normal cases. Now we will see what the actual cost in the special cases. What it says, asset previously used for scientific research. Nil. Stock converted into capital asset and used for business and profession. FMV of the date of conversion. Whatever the date of conversion is going to be what? Actual cost. Now, asset acquired by way of gift, will, inheritance. So, whatever the actual cost to the previous owner, less depreciation already to them. Whatever the depreciation already allowed to them is the actual cost. So, what can I say? Can I say it is a carrying value, the carrying amount of the asset to the previous owner? That is going to become what the actual cost to you. Now, asset acquired with the intention to claim higher depreciation. If you want to claim the higher depreciation, so for that, the asset of 10 lakh rupees, you are acquiring it for 1 CR. Oh, this is very, very wrong. So, what you have to do? So, the AO will come into picture and with the permission of the joint commissioner, he will take such action. Okay, and he will find a new actual cost, and usually the AO takes what? Fair market value. Now, reacquisition of assets sold. Whatever the asset was sold, we are reacquiring it. So, at whatever the WDV at the time of sale, or the reacquisition price which on which we are taking it back, whichever is lower is going to be what? The actual cost. Now if the asset was purchased and leased back to the same person, I have purchased the asset from Mr. A. Okay, I am Mr. B. Suppose I have purchased the asset from Mr. A, and now again I am leasing to what? Leasing that particular asset to Mr. A only. Okay, so whatever the WDV to the previous owner. Who is the previous owner? Previous owner was Mr. A only. So that will be the WDV for Mr. only, not the WTV of Mr. B. Understood? Now, building was used for the other purpose, now bought into business. So, if I was using any particular asset as a personal use, okay, for personal use, there was no depreciation allowed. So, they said that original cost, the actual cost will be what? The notional original cost minus notional depreciation till the date when you use it in a business purpose, and that to be depreciated by the current depreciation rate. Whatever the rate is going on today, you have to depreciate it by that rate only, not the previous year's rate. Then it will come to what? Actual cost. Now capital asset transferred by holding company to subsidiary company, but here it is what important: 100% subsidiary, not all subsidiaries, only the wholly owned subsidiaries. Okay, so these are the same thing. Okay, of same person having the two hands. I am transferring one thing from here to here. See, this is the asset. Suppose this is the pen. Okay, I am transferring from this hand to this hand. Okay, now how it will change the ownership? No, it is not going to change the ownership, because I am the person. Na, I have the two hands, so I am transferring from one hand to another hand. So how will it going to impact the taxation? So the government also said that no, it is not going to impact the taxation. So take the same WDV on which it has transferred to you. Okay. So the WDV to the transferor who are transferring that. Okay. Then amalgamating and amalgamated company. So the WDV of the amalgamating company, same thing. Demerged to resulting. So the demerger, the WDV at the time of demerger to the demerged company, that is going to taken. Okay, then point number 8 we have left. Point number 9, GST and customs duty. What we have said, that if you are claiming the ITC, then do not come and claim the depreciation. But if you are claiming the depreciation, then do not go and take ITC. You can take any one benefit, not the both the benefits. Okay, then we have talked about what? Government grants and subsidy. I have said now, government grant and subsidy is to be reduced from the actual cost. Okay, so what it says, related to any asset, not any other expenditure, only for asset. Then it is reduced from the actual cost. Now we have written some notes as well on the. We have written some notes as well for the. Just take. Let me see. Yeah, we have written some notes as well. Any subsidy, grants, cash incentive, duty drawbacks, waiver, etc. by central government or state government or any authority, okay, or body other than those referred under section expression 10. What was those? Those were other than asset. Means under expression 10 it was written for asset. So if it is saying that other than asset, okay, other than expression 10 means it is saying what? Other than assets. Okay, means if there is any subsidy, grants, cash incentive, duty drawbacks given except assets, other than assets, it shall be treated as income. So all things other than asset, all the subsidies is going to be treated as income and will be taxable under the head PGBP. Some important notes was that if the subsidy received for acquisition of any asset, it shall be deducted from the actual cost, and any subsidy or grant received by the trust or institution established by whom? Central government or the state government. But The corpus fund is received from whom? The central government only, not the state government. Shall not be treated as income. Shall not be treated as income. The above provisions are not applicable on the LPG subsidiary or any other welfare subsidy. See, the government wants to provide you the welfare schemes. Government want to provide you what? The cost benefits. Okay, for those, if they are charging the tax on your income and including it in your income, then it is going to be very unprofessional thing. Okay, of the individuals. Okay, understood that? Now we have left this, and this. We will take in the next whenever the time came. Okay. Now coming to the unabsorbed depreciation. For what I have said that suppose if your PGP and other incomes are not able to absorb the depreciation and you are left out with some depreciation, that particular depreciation is going to be carried forward for the next assessment years, and it is going to be carried forward for the infinite years. Now what is going to be the set of criteria? First you have to set up what first you have to take the deduction of current year depreciation, then the balance forward losses, because it is only allowed for the 8 years. Okay, then only the on the third number you can take what brought forward an absorbed depreciation and claim it if you have sufficient profits. Okay. Now, depreciation in case of a power generating unit. If there is a power generating unit, then there are depreciation. Okay, what it says that generation for generation distribution of power. Okay, the both things are important. Then they can claim what SLM on each asset or WDV on the block of assets. Okay, for that the terminal depreciation and the balancing charge and the capital gains was came into picture. Now coming on to the example, because it is only be understood by that particular example. Okay, see for the SLM, the depreciation on the power generating unit. Original cost is suppose 1 lakh rupees and it depreciated for 3 years, which has the asset of 10% depreciated rate. Okay, so we take depreciation for 3 years on the SLM method. So it will take directly 30,000 rupees, and the written down value will be the carrying amount of the written down value will be 70,000. Now suppose if I sold it for 50,000 only, means the asset in the books is 70,000, but in the market the particular asset only worth for rupees 50,000, means there is a 20,000 is less depreciated in our books. So take depreciation of that 20,000 as well. So the government said that it is a terminal depreciation. But suppose if the asset in our books is what 70,000, and but in the asset in the market the cost of the particular selling price was 80,000. If I want to go and sell that particular asset of the carrying amount of 70,000 in the market, I will get what 80,000. So the government is saying that, oh, we have given you the excess 10,000 rupees of depreciation. Oh, so you have to give what? You have to give us the tax on that. So we will deem income. We will deem it as your income, and we will take tax on you on those particular 10,000 rupees on which we have given you the excess depreciation. Okay, because we have given you the excess depreciation, then only it comes to 70,000. But if we did not give you that particular 10,000 rupees of excess depreciation, then your cost will be on that, then your carrying amount will be 80,000, and on that particular price only you have paid, you have sold your asset. So we have less charge you. So now it will be your deemed income. So 10,000 becomes your what? Deemed income, and it will be called as balancing charge. Okay, now there is an important case in which the selling price is 1,20,000. See, I have purchased the asset for 1 lakh rupees and sold it for 120. So the government is saying that your WDV was 70,000. Okay. From 70 to 1 lakh rupees, whichever the actual cost. Okay. And it is what balancing charge, and we will take what we will include it in your income. Okay, but over and above the actual gain, which whatever you are selling, we have sold for 1,20,000, and the actual cost was only 10,000. So excess 20,000 will be taxable as a capital gains. Okay, it is a capital gains. Understood this point as well? See, balancing charge will be 30,000 from 1 lakh to 70,000, and over and above the actual cost of acquisition, that is 20,000, it is going to be capital gains under section 50A. What is the capital gains under section 50A? See, capital gains is what? Whatever the selling price, selling consideration minus the cost of acquisition will be the capital gains. Okay, but but they have said that we have to adjust something in that cost of acquisition. So they adjust what it says, written down value method with written down value plus balancing charge, because it is a deemed income. We want to take tax on it. Okay, less what? Depreciation, less the terminal depreciation. So after this calculation, whatever comes, put it into this, and this is the final what? Capital gains that we compute. Okay, these 20,000 we have already computed in this manner. Understood this point? Okay. Now we have came to the last point, which was section number 33AB, which was doing in the last class as well. Now reduction in respect of what? T development account. Now what you have to do for this allowance? There are two conditions. What is the two conditions? See, first is the assessee must be engaged in the growing and manufacturing India for tea, coffee, rubber. There are only three things that are covered under this section, not the other things. See, we have taken an example of the ICA which says about the saplings or in the nursery something. It is not covered here, so it is a wholly part, wholly what? Agriculture income. We will take it as exempt. Okay, we will allow it 100% in agriculture income. But if there is a tea, coffee, rubber, it is growing in manufacture in India. It is important. The word India is important. Okay. He has deposited the amount, the earned amount in the NABARD account or the any the deposit amount account as per the scheme framed by the tea, coffee, rubber board. Okay. And up to what date? Up to the 30th September of the relevant assessment year. And whether you have deposited or not, who will verify it? The CA will verify it, and it will write in what? Its tax audit report. That tax audit report also needs to be submitted 1 month prior to the date of filing of return of income. That also comes to what? 30th of September only. Now, how much depreciation, how much deduction I will get? The least of the following. What is the least of the following? The actual amount or 40% of the PGBP before allowing section number 33AB. Okay, because we are going to calculate the deduction for the 33AB, then how can we allow the 33AB deduction? Okay, so for that, actual amount or 40% of the profit before allowing the deduction of 33AB, whichever is least, whichever is lower, is going to be allowed as a deduction to you. Now we will take deduction back. We will deduction back if you have done something. Okay, what are those things? See, if you have the closure of business or dissolution of a business, then it is done intentionally. Okay, then it will be taxable, and when the amount is received. Okay, partition of HUF, the death of assets, or liquidation when you do not have the asset, when you do not have the liability, when you do not have the assets to pay off the liabilities, you gone under the insolvency bankruptcy code. Okay, in these cases, the government does not want to tax you. The government is going to exempt whatever the amount you have withdrawn for those purposes. Okay. Now, prohibition for utilization. What are the prohibition for utilization? See, you cannot as already studied in the additional depreciation. I have already reminded you both the points. First is any plant or machinery which is installed in the office premise of the residential accommodation. Second is was plant and machinery on which 100% cost is allowed as a depreciation in any one previous year. And third point was any office appliances. But here computers are not covered. For computers it is going to allow. Now, okay, now what it says that whatever amount you have withdrawn from the NABARD or the deposit account, you have to utilize in the same previous year. In the same previous year, if you have not utilized in the same previous year, then it is what? Unutilized amount, and it is going to be deemed income for you. Okay, now in the another case, what is the exemption withdrawal? In the another case is that if you have withdrawn the amount from the NABARD or the deposit account and utilized is for the asset purchasing, that is as per the scheme. But you have sold that particular asset within the 8 years from the end of the year of its acquisition, not the assessment year. When the asset was acquired and you have sold it within the 8 years, then we will take back your exemption and we will add it to your income, and we will deemed as a profits and gains from business and profession. Now we have seen what? We have seen the Last part, the percentages. Growing and tea, coffee, rubber. Okay, growing and manufacturing, 40% PGBP. Coffee is 25% PGBP and rubber is 35% PGBP. And rest is what? Agriculture income. But for roasting and grinding also, not alone roasting and grinding. So growing, manufacturing, roasting and grounding. If both are these covered, so it is done only for the coffee. So for coffee purposes, the 40% is what the PGP income and 60% is what the agriculture income. Till now, I have completed the revision of whatever we have studied till now. It is approximately 43 minutes. We have completed the whole revision of PGBP chapter. I hope till now what we have studied, I hope you remembered each and every point that we have discussed in the class. Okay, now as I have said that we have already solved one question that is from the illustration number that is from ICA study material illustration number 21 based on section number 33 AB. Okay, understood this point as well. Now, as I have said that there are some steps of solving the questions of section 33 AB in exams. The same everything you have understood why it is adding, why it is lessing, but one point which I have said that I will explain. What is this point? Brought forward losses to be adjusted from PGBP income. Question number 35 ABM, which talks about what? Petroleum and natural gases. If there is a SSE who is engaged in what? Extraction and production of natural gases and petroleum in India. Okay, so everything is same. Okay, everything is same as 35 AB. Okay, 35 AB, the same, everything is going to be same, but the quantum of deduction will be the amount or 20% of PGP before allowing this deduction, whichever is lower is going to be taken care of. Now, section number 35 talks about what? Expenditure on scientific research. They said that capital expenditures are allowed, yes. For newly business allowed or the existing business allowed, all the allowed, but except land. For land there is not going to be any section number 35 expenditure will be allowed. Okay, for revenue expenditure, if there is a existing company, then it is allowed, yes allowed. For new company, allowed, yes allowed. But if you are a company that is newly commenced, so for the last 3 years only, for the last 3 years only before commencing your business, we will allow all capital expenditure but except land. And for revenue expenditure, we will allow only salary and the raw material expenditure to you. Agreed. Then if there was a loss in the first year of the commencement, okay, then you can carry forward and set off infinitely, treated as a unabsorbed depreciation. Now the contribution based deduction, what it says that contribution made to what? Notified government bodies, okay, for scientific research or the social science or statistical or national laboratory, IIT, university, person approved by prescribed authority for approved programs, or Indian company whose main business, whose main objective is for scientific research and development, approved by whom? CCIT, and amount is paid for use in scientific research. In that particular case, the 100% deduction is going to be allowed to you. But when you have contributed, after your contribution, the assessee is not the notified business by the central government, then whether you will get whether you will keep taking that deduction of that particular contribution. Yes, the government clarified that after your contribution, if the notification is withdrawn by the central government, then do not worry, you can claim that deduction accordingly. Okay, but there are two conditions for claiming the deduction. Na, the assessee who have taken these contribution, they have to submit a statement, okay, to the central government in the form 10BD, okay, 10BD till 31st of May of the next financial year to DGIT system. DGIT is Director General of Income Tax, the principal DGIT. Okay, then furnishes a certificate to the donor. On that particular basis only, that donor can claim the deduction. Understood. Now coming to the point number to section number 35 ABB. It talks about the license, obtaining of license fees, obtaining of license for the telecommunication services. Okay, it says that if if the telecom license has been actually been paid before commencement of business, okay, before commencement of business, or if you are an existing business and you have renewed your license, then from the year of commencement or from the year of purchase of the or from the year of actual payment of the fees till the year in which the particular license is going to expire, you can claim the expenditure of those license fees that you have paid. Understood? In the case of amalgamation or demerger, the amalgamated company or the demerged company can claim the depreciation for the rest of the period. Okay, the outstanding installment. Then section number 35 ABA, it talks about obtaining the spectrum license, spectrum fees, sorry, right to use the spectrum for telecom services. It is usually provided for the internet services. Okay, so what it says, it has to be you actually being paid. Each and everything is going to be same, but now for section number 35 ABA, they have provided the definition of has actually been paid. So they said that under the rule number 6A, they said that the actually been paid also includes payable, but it should be in accordance with the Department of Telecom. If they have provided the installment, then we can treat it as what actually been paid. But such deduction is not available for 35 ABB. They have to actually pay the amount. Okay, is this point clear? Now coming to section number 3580, I want you to read this section along with me because it is very important for you to remember all these points which are the specified businesses along with me, because when I am reading you have to recall each and every point along with me. So start with the full screen. Then the first point is that the setting up and operating of the cold chain facilities for specified products. Okay, the agriculture and the forest produce, meat and meat products, poultry, marine and the dairy products, products of horticulture or apiculture. Okay, then second point was the setting up and operating what warehousing facility of storage of agriculture produce, laying and operating cross country natural gas or petroleum oil pipeline networks, building and operating anywhere in India a hotel of 2 stars or above category. Okay, na? Okay. Then building and operating anywhere in India a hospital with at least 100 beds for the patient, developing and building a housing project under a government scheme for the redevelopment of the slum or the rehabilitation or for the affordable housing. Then production of fertilizers in India. Okay, then the setting up and operating in inland container depot or a container freight station, beekeeping and production of honey and bee bags, setting up and operating a warehousing facility of storage of sugar, laying and operating a slurry pipeline for the transportation of iron ore, setting up and operating a semiconductor wafer fabrication manufacturing unit as notified by the board, and last one was the developing and or maintaining and operating a new infrastructure facility like road, port, airport. I just want you to just get a glance through of all these points. Okay, take a minute and take a glance through of it. Just take a glance through of all these provisions because it is very important that you know each and every point of these 13 points, because any of the point can come in your examination and you have to solve accordingly. So have a glance through of all these 13 points, take a minute and solve it. Now, moving ahead, if I have the section number 35 AD specified businesses, so what will be the quantum of deduction? That I will get the 100% of the deduction of the capital expenditure, but that capital expenditure will not include the land, goodwill, and the financial instruments. Okay, when I will get that in the year of its occurrence. But suppose I have incurred certain amount of expenditure in the year when my business was not commenced. So whether I will get the deduction? Yes, I will get the deduction. There are certain conditions. If I have incurred any of the expenditure which is commencement, which is prior to the commencement of my business operation, and it is already capitalized in my books of account, then in the year of commencement of that business operation will be allowed to me. In the year of its commencement of business will be allowed to me. Then see, the first point of this deduction under this section shall not be allowed. Of this, the first point we have covered, that the land, goodwill or the financial instrument shall not be allowed. Okay, then see point number two, any expenditure in respect of which, see, whether it is 43.1, the actual cost definition. If you are paying the aggregate or aggregate of payments, okay, and it is exceeding 10,000 rupees other than by all these modes, then it is also going to be disallowed. You are not going to get deduction of these things. Okay, now what are the conditions? What are the conditions of these things? What are the conditions? That it should be a new business, whether the splitting up of business is allowed, reconstitution of business is allowed, no. Okay, now tell me whether the loss of a specified business can be carried forward for the infinite period. Yes, the loss for the specified business can be carried forward for infinite period. And suppose, and tell me whether the loss of a specified business can be set off from the non-specified business. No, this is wrong. The loss of a specified business can only be set off from the profits of a specified business. Okay, you cannot set off the loss of a specified business from the profit of a non-specified business. I hope it is clear. Then second point is that new plant and machinery. What does the new plant and machinery means? They are saying that you have to acquire and install the new plant and machinery, but there are certain exceptions to it. What was that? It If it is an imported plant and machinery, whether it will work? Yes, the imported plant and machinery will work. Okay, or 20% of the old block. If you have a block of asset on in under which 20% of the assets are old block or old asset, whether it will work? Yes, it will work. There are no issues. And if you are claiming section number 3580 deduction, then there will be no deduction will be available to you for the depreciation. No deduction will be available for the 10AA or 80IA to 80 RRB. All the profit link deduction will not be available to you. I hope it is very much clear. Now, what is the lock-in period in the section number 35? There is 8 years of the lock-in period, that you whatever the asset you have acquired, you cannot transfer it to the non-specified business within that 8 years of it from the end of the year of its acquisition. You cannot transfer it. If there is a violation, see, if there is a violation, then what you have to do? Deduction and deduction, what is allowed under section 835D, less notional allowable depreciation, because actually you have not allowed deduction because you were claiming section 3580 deduction, but now they are saying that if there is a violation, okay, now what will we assume? Whatever deduction you have taken, reduced by the notionally allowable deduction, as we will assume that there will be no section number 3580. So what will be the deduction on those particular assets? Take that particular asset, a deduction, then whatever the balance figure will be, it will be deemed your PGBP and will be added to your actual cost and take the corresponding deductions subsequently. Okay, now sale and destroy will not be treated as a violation. Okay, and whatever the amount of consideration that you receive while selling or receiving what insurance compensation or claim will be treated as your PGBP income and will be taxed accordingly. I hope it is very much clear. Shall we move ahead for section number 35D? We have written down this section number 35D. Let me open that. See, section number 35D, deduction of the preliminary expenses. It will be available to the Indian company or any other resident assessee after or before the commencement of businesses. Both the time will be allowed. Yes. What is the expenditures that are covered? See, preparation of feasibility study or the project report, market survey, engineering survey, drafting and printing of MOA, AOA, legal fees, expenditure related to public issue of shares and debentures, or other expenditure related notified by the CBDT will be allowed as a expenditure. Okay, now what are the deductions? The deduction will be allowed in the 5 equal installment. What will be the amount of deductions? We will calculate divided by the amount of deduction divided by 5. What will be the amount come? You have to take it in the 5 equal installment. Now what is the amount? See, if you have a Indian company, if you are a Indian company, then you have to compare the cost of project or capital employed, whichever is higher. Take 5% of it and compare it with actual preliminary expense. Now you have to compare whichever is lower. This is your amount of deduction. And for the other resident assessees, actual preliminary expenses of 5% of the cost of project, whichever is lower, will become what? Will become the amount of deduction that you have to take. Now what is the cost of project? Cost of project is the amount invested in the fixed asset. fixed asset that too as per the books was on the last day of the previous year, and the capital employed will be share capital, debentures, long term borrowings, okay, of the last as on the last day of the previous year. In that as well, the reserves and surplus including the share premium will not form part of share capital. You cannot take reserves and surplus including the share premium while calculating the calculating the share capital. I hope it is very important, very clear to you all. Now, to claim section number 3580 deduction, you have to get your accounts audited. Okay, all the details of your expenditure will have to be submitted under form 3AF 1 month prior to the filing of return. Okay, the same will be applicable to you like the 30th of September. Okay, now what they are saying that as our pre-incorporation expenses are allowed under section number 35D, so whether any income that we have earned in a pre-incorporation phase, whether this will be also taxed. So the government, so the Supreme Court said that in the Supreme Court ruling, they have said that the post income, if the income earned by the company prior to its incorporation taxable in the hands of the company, they have said that no. Now, share issue expenses are disallowed. Expenses on bonus issue is allowed because they are the revenue expenditure or the fees paid for enhancement of a authorized share capital. You are going to increase your authorized share capital. It is treated as a capital employed and you cannot allow it, so you have to disallow that particular expenditure. I hope it is very much clear. Similarly, we have seen that the two sections, section number 35D and section number 35DDA. Section number 35DD was only available for Indian companies on the expenses on amalgamation or demerger. The same 1 by 5th you have to take from the year of amalgamation or demerger. Okay, now section number 35DDA, it's taking saying that if any person taking expenses on VRS of his employees, if there are any expenses that has been done on the VRS of his employees, okay, that should also have to be taken by 1/5 from the year of its incurrence. Okay, and now suppose there was a company who has taken three installments. Okay, now it amalgamated to another company. The two balance installments were left. So whether the amalgamated company can claim the balance two installment, they said yes, they can carry forward and they can outstanding balance can be outstanding installment can be claimed by the transferee company or the amalgamated company. I hope everything is clear and perfect till now. You are recalling each and every point. Okay, is this point clear? So shall we move forward for the section number 36? Okay, now moving forward to section number 36. See what section number 36 are saying, that section number 36 saying about the other deductions. So what are the other deductions? Say if there is a company who is insuring, who is paying the insurance premium for the insurance of their stock, whether they are allowed, yes, they were allowed. But the companies who are paying the insurance on the life of their partner, which is not allowed. But insurance premium paid for the for the keyman insurance, whether it is allowed. If the PGBP section under PGBP chapter under section number 28 saying that the what is the maturity received under the Keyman insurance policy will be taxed under that section number 28, the PGBP. So for that, the premium paid for on that Keyman insurance policy is also to be allowed as deduction. So point number A is clear. Point number B, if the Federal Milk Cooperative Society is paying any premium on the cattles done for the done on the cattles which is raised by its members, so whether the insurance premium paid by the Federal Milk Cooperative Society is allowed as deduction, yes, it is allowed as deduction. Then premium paid by the employer that is not in cash for the health insurance of the employees, it is also allowed as deduction. Then bonus and commission, okay, we have written for the bonus and commission. Bonus is allowed even if it is over and above the payment of bonus act, it is also allowed, yes, it is allowed. But there is a subject to section number 43B which says that the bonus should actually be paid, okay, and before the due date of filing of return it should be actually paid. Then the case law of Sassoon Chemicals and Trucks Limited says that if the company has deposited the amount to the trust before filing of return, because there was some dispute between the companies and the employees were going on, So whenever the settlement will happen, the trust will pay the amount of bonus to the employees. But as of now, what will happen? As of now, the company has deposited the payment and deposited the bonus to the trust. Whether it is allowed? Yes, it is also allowed. Then interest on loan, if it is a borrowed fund, see, okay, if it is for the personal purpose, it is not allowed, okay. But for business and business profession, if it is taken from NBFC, scheduled bank, public financial institution, that is PFI, state financial corporation, SFCs, and state industrial investment corporation, that is SIICs, so it is allowed that to subject to 43B. But if you have taken loan from any other, if any other financial institutions or any other banks, okay, then it is allowed and not subject to 43B. There was no condition of 43B that you have to actually pay or pay before the due date of filing of return. There is no such condition available, okay. This is also clear. Then interest on loan advance to sister concern, if it is for the commercial expenditure, then only it is allowed, otherwise not allowed. Then if you have taken loan for payment of the income tax liability, now income tax liability is a personal liability, hence it is disallowed, okay. Is this point clear? Now employers contribution, who is contributing? Employer is contributing for the benefit of employees, okay. If it is contributing to a statutory provident fund, recognized provident fund, approved superannuation fund, approved gratuity fund, or any other fund that is as per the law, then it is allowed and subject to 43B. But if the employer is contributing in these funds like unrecognized provident fund, unapproved superannuation fund, unapproved gratuity fund, or any other fund, then it is not allowed as deduction. Then what they are saying, employer contributing to the pension scheme, if employer is contributing to the new pension scheme or the national pension scheme, then the deduction will be allowed to the employer, but subject to a certain condition, certain amount. What is the amount? They are saying that first it is subject to 43B. You have to comply the section number 43B, okay. Then only you will get the deduction. Now what is the amount of deduction that I can claim? So they are saying that actual contribution that you have made, or 14% of the salary is the basic plus DA in terms of employment, whichever is lower. In this, whichever is lower is going to be the allowed deduction, then you can claim that deduction, okay. Then come to the point number H is completed. Point number I. Point number I. What they are saying that, see, they are saying that if any amount received by employer as a contribution from his employee, okay, towards the welfare fund, okay. So for that, if the employer wants to get the deduction, then the deduction will only be available when it is deposited within the due date of the fund, not 43B, due date of the fund, that is within 15 days from the end of the month, okay. In this section 43B does not apply. I hope it is clear. Now if you want to take the deductions of in respect of the animal which is not in stock in trade, it is not your stock in trade, then what will be the deduction? You can take the deduction if they have died or become permanently useless, then only you can take the deduction, and the amount of deduction would be actual cost minus scrap value will be the deduction, okay. Now coming to the bad debts, okay. If it is a provision for bad debt, then it is not allowed, only allowed for the banks. If it is an actual bad debt and it is bad debt relating to a loan, then also it is not allowed, only allowed to the money lending businesses. But if it is related to the sales, then it is allowed for your business. Now to take the bad debt deduction, first condition is that the bad debt should be written off in your books of account, okay. If you want to take the deduction of the bad debt as of now, so you must have given the tax of such amount of bad debt and included in your income in the earlier years or the previous years. Yes, okay, both these 2 points are covered. Now do you need to prove that your debt has become bad? Do you have to prove that? No, you do not need to prove any of these things. Now what they are saying that according to the Ind AS or the accounting standard, you do not need to recognize the you do not need to write off the bad debts, but according to the ICTS they are requiring you to write those bad debts, okay. So in that particular case, whether you will get the deduction of the bad debt or not, yes, you will get the deduction for those bad debts, okay. Is this point also clear? Then successor of a business can claim bad debts deduction even though the relevant debt has taken into account in computing the income of predecessor. Suppose predecessor has included the income, has included the particular amount of debtors in their income. Now when the business was transferred to the successor has faced that particular amount as a bad debt, or the debtor is not able to pay such amount. Okay, so he has write off in the books of accounts. So whether the successor can claim the deduction on the income which is shown by the predecessor, yes, they can claim. So is this point clear? Now if there is a firm who had claimed and allowed a bad debt, and the firm was dissolved and taken over by a partner, now the partner recovered the bad debt, the partner recovered such bad debt. So whether it will be taxed in any of these hands, no, it will not be taxed in either in the hands of firm or in the hands of partner. It is not taxable at all. I hope this point is also clear. Now advance paid to suppliers. Suppose you have paid some advance to the supplier for supply of some raw materials. Now the supplier is also not supplying you the raw materials, nor they are giving you the refund of those amount that you have submitted, the advance amount. Okay, so it is as good as your bad debt. So whether it is allowed? No, see, it is not allowed, because this is your expenditure. That is why it is not included in your in books of account as income in the earlier year. That is why such amount shall only be allowed under section 37, but not under section 36. For section number 36 it is not allowed. Okay, now provision for bad debts in the case of Indian banks, it will be 8.5% of the GTI, or 100 plus 100% of the aggregate advances to the rural branch. What is the rural branch? Whose population is less than 10,000 rupees. And for the PFI, SSICs, SFCs, foreign bank, NBFC, what is SIICs and SFC? You have already studied. See, you have already studied this: SFC, SSI, SIICs, PFI. Okay, all these are covered here. Okay, so for these banks, what is 5% of the GTI is going to be a provision for bad debt that is allowed to you. Okay, when the provision for bad debt is allowed, then there will be no deduction of the actual bad debts. Okay, and when you have to calculate the actual bad debt, the amount will be total debt minus the provision for bad debt. You will calculate the actual bad debt like this. I hope this point is also very much clear to you. These covered, this covered. Okay, these 2 points also covered. Now, the very basic points are there. If there is a company, if there is a bank engaged in eligible business. What are the eligible business? The development of infrastructure, housing. Okay, these are what the eligible businesses. Okay, if they are providing, the bank are providing what? Long term finance for these eligible businesses. So there are the special deduction for those banks. Now what is the deduction? Deduction will be the least of the following. What is the least of the following? Whatever the amount transferred to the special reserve, 20% of profits, and 200% of paid up capital and general reserve. Whichever is lower is going to be the amount deducted. I hope it is clear. Now expenditure on family planning is only available to the companies and not other assessees, and it will be available for 5 years. You have to take the amount of deduction in 1 by 5th. Yeah, means the 5 years you have to take the deduction. These family expenditure, capital expenditure on the family planning will be treated as a as good as the unabsorbed depreciation. So you can carry forward it for infinite number of years. I hope it is very much clear. Now deduction for the STT and CTT is allowed if it is a stock in trade for you, the trading or the commodities market and the share market. If it is as like as the stock in trade for you, then you can take the deduction of STT and the CTTs. Okay, now expenses incurred by the cooperative society engaged in the business of manufacture of sugar. If the expenses have been incurred by the cooperative society who are engaged in the business of manufacturing sugar, and they are purchasing or procuring the purchase of sugar cane, they are procuring the sugar cane, because from the sugar cane only the sugar will be manufactured. Okay, so the cooperative society is engaged in the business of manufacture of sugar, are purchasing the sugar cane at that particular price, whether they are purchasing on MSP or below MSP or higher MSP. That doesn't matter at all. If they are purchasing sugar cane for production of sugar, it is allowed as deduction. Now only mark to market losses are specific, which are specifically written in ICDS, is only allowed and not other deductions are allowed. Okay. Now what we have said, that section number 37, to claim section number 37, see there are three conditions. First condition is that it should not be your capital expenditure, it should not be a personal expenditure, and it should be wholly and exclusively for the business or profession. You cannot say that it is partly for business and partly for a personal purpose. No, it is not like that. It should be wholly or exclusively for business or profession only. Now, as we also said in the classes, what you have to do, you have to just revise it, you have to just recall all these points by your own. Just try to recall each and every point which is written, what is allowed and what is not allowed in the table. You have to recall it once. Just recall it once and let me know. Just giving you a minute. Recall it and let me know whether you are able to recall it, because all these provisions you have to recall. These are the provisions which are a summation of your examination questions, case laws, and various other law provisions. All are covered in this particular table itself. Just take a minute and revise. Now revise the second page. Revise the second page. Now moving forward. Okay, section number 37 2p, what they are saying, that they are saying that, see, for the advertisement expenses which is related, which you have done in the political party publication, it is not allowed under section number 37, but it can be taken as deduction under section 80 ggb for the companies only. 80 ggb is available for the companies only. Okay, is this point clear? This is what they have said. Okay, now coming to the 40AI, 40AIA, 40AIB, and 40A3. What they are saying there? See, 40AI. If any chargeable sum except salary which is payable to the foreign company or other NR. Okay, if there is a chargeable sum that is except salary and payable to a foreign company or the NR, or any sum which is chargeable to tax which is payable to a resident only, not non-resident, only resident. And for the certain conditions, there are certain specified services if it is payable to a non-resident and you have paid, there are two conditions. Either you have not deducted the TDS. The second condition is that you have deducted but not deposited the TDS on time. Okay, in these particular cases, for the cases of non-resident, whole 100% is disallowed to you. Whole 100% is disallowed to you. But for resident, only 30% is disallowed to you. Now the proviso is saying that, see, if you have not deposited the amount today, but you have deposited the amount in the next year. So whether you can take the deduction in the next year, yes, you can take the deduction in the next year in which you have deposited such amount. But if there is a salary which is payable to you, if there is a salary which you have to pay, okay, and you have not paid within the time prescribed in the TDS chapter, then the 100% disallowance will be available because it is for the non-resident, okay. But if I can pay in the next year, whether can I take the deduction? No, no. For salary there are no such point it's written. So it means if you have delayed for 1 day as well, now you cannot take the deduction ever in your life. I hope it is clear. Now there is a relief for 80 40AI and 40AIA. What they are saying, that if the tax has to be deducted but you have not deducted and you are also not a assessee in default, when we can say that the assessee is not in assessee in default? See, when the payer is not deemed to be assessee in default, when, see, we have taken an example, if I'm not wrong. Yeah, Mr. A was a resident. He had taken the consultancy services from Mr. NR, okay, the non-resident, and the Mr. NR have to pay the 8 lakh rupees and they have paid without deducting the TDS. Now it is 100% disallowed in the hands of Mr. A, but Mr. NR was an honest person. He came to India and showed the income of 8 lakh rupees from India and also paid tax on these 8 lakh rupees. So the IT department got the 8 lakh rupees income and tax on that. So IT department is saying that if the NR, if the another person have paid the tax on such income, now you can take the deduction thereon, and we will not assume you as a we will not assume as a assessee in default and not penalize you. I hope it is clear. I hope it is clear. Okay. Now, in the case of Palam gas services, what is said that the payable also include the paid. Okay. Then 48.2, the income tax. The word is income tax. It includes the surcharge, cess, and everything. Okay. The if the word, wherever the word income tax is written, the income tax means including the surcharge and cess. Now 48.2b, what is it is saying that if the state government undertaking is paying any is paying any fees or payment or any charges to the state government, then it is going to be disallowed. Then it is going to be disallowed. Now if the assessee is, now understand it very carefully, if the assessee is paying for the goods or services or received or facilities provided by the specified persons of that particular assessee, and if the AO is thinking that the amount which have been paid is excessive or unreasonable, then having regard to the fair market value or the legitimacy of that particular amount, they can disallow such excess. The word is such excess will be disallowed, not the whole amount will be disallowed in the hands of the assessee. Now who is the specified persons? See, for the definition of a specified person, individual, for the individual, spouse, brother, sister, linear ascendant and descendant will be the specified persons. For the company, firm, AOP, HUF, director or relative, partner or relative, member or relative, member or relative will be the specified person. Why it is two-time member or relative? Because for AOP as well there is a member, and for HUF as well there is a member. For company, the director and its member. For firm, the partner and its member. Okay. Now for the other assessees, individual having a substantial interest in the business or profession of assessee or relative, it will be covered. Now what is the meaning of substantial interest? The 20% or more than voting power is acquired, then the substantial interest has been gained. Okay. Now 48 disallowance out of the cash expenditure. What they are saying that if see, this is the definition of actual cost itself. See, if it is exceeding 10,000 rupees, then the full amount should be disallowed to you. But in case of the transport operators, this 10,000 will increase to 35,000 rupees, and this full amount is going to be disallowed, not the excess amount. I hope it is clear. Now there are certain exceptions to it, or where you can pay more than 10,000 rupees. The exceptions are to if you are paying to the government, bank, or the financial institutions. Okay.
bank entry at a place where where the banking facility not available, against the retirement benefits like gratuity or and such other benefit does not exceed 50,000 rupees, whether temporary, if the employee is your temporary posted at some place and he does not have the banking facility there, okay, so it is allowed, you can pay more than 10,000 rupees. Now what is temporary posted, it is greater than 10 15 days, okay. While authorized dealer or money changer, if they are dealing in the day-to-day businesses, whether they can do so, yes, greater than 10,000 as well, yes, they can do so. Now for the purchase of agriculture, forest produce, forest animal husbandry, fish and fish products, okay, horticulture, apiculture, okay, the products manufactured and processed without the aid of the power in the cottage industry, then it is allowed, okay, to the cultivator, okay. Now you can tell me whether the payment to a trader or the middleman is allowed as deduction. No, it is not allowed to deduction. But if the payment is given for the headman of the fisherman, is it allowed? Yes, it is allowed, okay, it is allowed. Section number 48 3, what they are saying that, see, in the, when you have, suppose you have done you have paid in some particular year more than 10,000 rupees, okay, it should be disallowed, okay. But suppose the AO, the assessing officer, has determined this point in the later, after 2 years, after 2 years they have determined it. So in that after 2 years, whether they can charge you the tax, yes, they can charge you the tax, and they will increase your income of this year, they will increase your income for this year, and they will give you, they will tax you, okay. So it will be treated as your income in the year of violation is itself, in the year of violation, not in the year of detection, but in the year of violation it will be treated as PGBP. Now 40A7, if there is a provision for gratuity, whether it is for the actuarial valuation or not does not matter, no deduction will be allowed. And 40A9 we already have studied, okay, along with section number 36 we have studied. Now coming to the 43B, see, bonus, interest and employer contribution we have already studied with the section number 36 itself. Now for the tax duty cess or fees under any law, is it allowed? Yes, it is allowed, but subject to section number 43B, that you have to pay, actually pay, that you have to actually pay, and that too before the filing of return of income you have to pay. Now if you are paying the leave salary compensation, okay, leave salary compensation, if you are paying so to the if you are paying so, then you have to also, then you also have to first pay and then take deduction. We will not give you the deduction on the accrual basis. Now if there is a sum that is payable to the Indian Railway for the use of their railway asset, then you have to do what, you have to first pay and then take the deduction thereon. I hope it is very much clear. Now explanation to 43B, what they are saying that, if there is an interest factor, okay, interest stream that is pending, but you do not but you do not have sufficient fund to pay that interest, okay, so what you have done, whatever the balance interest is remaining, you have said that make it as a loan, okay, and I will pay you the loan. But till now whatever the interest is whatever the interest is paid, it's okay. Whatever the interest is remaining to pay, just make it as a loan and I will pay from now. If it is a situation, if you have converted the interest, any interest, into the loan or borrowing or debenture, then it should not be treated as actually being paid, it should not be treated as actually being paid. Is this clear? So it will not be allowed as deduction under section number 43B. Now for the micro and the small enterprises, for the micro and the small enterprises, they are saying that if you have done the payment within the time limits specified in the section 15, then only you can take the deduction, otherwise no deduction will be allowed. Now what is the micro enterprise or what is the small enterprise? For the micro enterprises, for the investments not exceeding 2 crore or turnover not exceeding 5 crore will be the micro enterprises, or for small enterprises the investment is not increased, not excess than 10 crore, or the turnover not excess than 50 crore, then it is the small enterprises. And what is the time limit? For time limit we have made the chart. See, if the agreement exists, then check whether the agreement is saying that more than 45 days of the payment is allowed or less than 45 days of the payment is allowed. If it is more than allowed, more than 45 days is allowed, like 60 days, 70 days, so you have to do the payment within 45 days itself to take the deduction, otherwise no deduction will be allowed to you in this year. Otherwise, in the next year we will allow you the deduction. But if it is less than 45 days, then go as per the agreement. Now what they are saying, that if the agreement does not exist, so you have only 15 days to make the payment, that too after the date of actual delivery. This point is also clear to you. Okay, now coming to the deemed income. See, if there is loss, expenditure, or trading liability, okay, and we have claimed the deduction of any loss, expenditure, or trading liability, and afterwards we have recovered such amount of loss, or maybe the expenditure, or the trading liability is waived off or seized, or remission of those trading liability. So whenever we recover such amount, it will be deemed your income, it will be deemed your income. Whether your business is continued or discontinued does not matter, it will be treated your income. Now tell me, whether the interest factor the interest part of the working capital loan will be treated as remission or not. Interest factor, no, it will not be treated as remission, but the principal factor will be treated as the remission of the trading liability for the working capital loan. But if you have taken the capital loan, then it is not treated as a remission of trading liability, and hence cannot be reduced from the actual cost of the asset. I hope it is very much clear to you all. Now section number 43 CA, what they are saying, that they are saying that if your SDV, stamp duty value, is equal to 110% of the selling price, then it is okay, we can adjust it with the 10% of the variation. If your SDV is greater than 110% of the selling price, then we will take the stamp duty value as what? Stamp duty value as your full value of consideration. Okay, now if the assessing officer feels good to employ the valuation officer with fulfillment of the conditions, if the valuation officer comes into play, okay, and the valuation officer value is greater than the stamp duty value, then the stamp duty value will be the full value of consideration. I hope this section is also very much clear to you. Now coming to section number 43 CB, what they are saying, that if you have a construction or the service contract, then you have to compute the profit based on the percentage of completion method. So whether whatever the portion you have completed, you can recognize the revenue of that particular portion of that service contract. But if the contract is up to 90 days, the duration of the contract is up to 90 days, then you do not need to calculate as per the percentage of completion method. You just take the project completion. Whenever the project is completed, you can recognize it as a revenue. Okay, now if the contract is like such, where it is indeterminate number of acts, where there are various number of acts, or maybe we cannot determine whether we have completed this percentage or not, in that particular case, in that ambiguous project, what you have to do, you have to calculate as per the SLM basis. I hope it is clear to you. Now coming to section number 44 AA, the maintenance of books of accounts. You have to maintain the books of account. See, if you are a legal, medical, engineering, architectural profession, interior decoration, authorized representative of film artist profession of accountancy, technical consultancy, if you are in the business of these things, okay, and your gross receipts in all three previous preceding year is exceeding 1,50,000 rupees, then you have to maintain such amounts, such books of account. Or in other cases, you can maintain any such books of account that is necessary for the AO to calculate your total income. If you are not maintaining the books of account, you will be penalized by 25,000 rupees, and you have to maintain for 6 years from the end of your relevant assessment year. Your relevant assessment year ends on 31st March 2026, and so that you have to maintain for the 6 years from the end of 31st March 2026, which means is 31st March 2032. Okay, now maintenance of books of account for other business or profession. If you are a business or profession from these, if you are carrying these business or profession, then this is the limit. If you are carrying business or profession other than the limit which has been prescribed above, then if you are an individual HUF, then if your turnover exceeding 25 lakh rupees, or your PGBP income exceeding 2.5 lakh rupees in any of the previous preceding year out of the three, then it is going to tax. They will have to maintain. You will have to maintain the books of accounts. Or in any other person's case, if the turnover is exceeding 10 lakh rupees, or the PGP income is exceeding 1.2 lakh rupees, in any one of the previous preceding year, you have to maintain the books of account. Now coming to the tax audit. What is the tax audit? They are saying that, see, the tax audit is, if they are saying that if the turnover is exceeding 1 crore rupees in the previous year, okay, you have to, in case of the business, you have to you have to conduct the tax audit. Okay, you have to audit your books of accounts. Okay, now you can audit your books of account. This limit of 1 crore rupees will increase to 10 crore rupees if the cash sales is the cash sales is not greater than 5% of the total sales, or your cash purchases or the cash expenditure is not less, is not greater than 5% of your total expenditure, total payments. Then this 1 crore rupees will exceed to will increase to 10 crore rupees. Okay, these are the conditions. The 5% conditions are given there. Okay, now in case of a profession, this limit is 50 lakh rupees. Now if you are taking any benefit of the presumptive taxation, and you choose to opt lower than the value which is given in the presumptive taxation, then you have to complete your books of accounts as you have to complete your books of accounts and get them audited as well. I hope it is clear. Now the due date of filing of TAI means the tax audit report is 1 month prior to the date of filing of return of income. Okay, now whether you can revise your TAR, yes, you can revise your TAR till when, till the if there is a change in the recalculation of the section number 40 or 43p, till the end of the relevant assessment year, that is 31st March 2026. And if you have not or get your books of accounts audited, then the 0.5% of your total sales or the turnover or the gross receipt, whichever it is, or 1,50,000, whichever is lower, is going to be your penalty for not conducting the books of accounts audited. Now the presumptive taxation, the last part of this chapter is presumptive taxation. See what they are saying, that, see, 44 AE means if you are engaged in any business or profession of plying, hiring or leasing of goods and services, goods and sorry, leasing goods carriages, then only this section is going to be applicable for you, the presumptive taxation. If you want to come under the presumptive taxation, then it will override all the other sections that you have studied in the PGBP. Okay, this section is applicable to any person who have the goods or who are having the goods carriages not more than 10 goods carriages at any time during the previous year. For one day as well, if you are having 11 goods carriages, then you are not eligible for this presumptive taxation. Now in case of heavy goods vehicle, what is heavy goods vehicle? Whose weight is exceeding 12,000 kilograms. Okay, if your vehicle is like that, heavy goods vehicle, then the presumptive income will be 1,000 rupees per ton or per month, or part of the month will be the presumptive taxation. Okay, and for other 7,000 per month will be the part, will be your presumptive income, and on that you have to do the on that you have to pay the tax. Okay, now this is the allowability. The section number 30 to 38 is already, we will deem it that it is already allowed to you. Now how you have to compute the presumptive taxation? First you have to compute the presumptive taxation like this. Okay, on that you have to give the deduction of 40b, that is the interest or remuneration deduction you have to give. Now whatever comes is your PGBP income. Okay, whether you can show the lesser income, yes, you can show the lesser income. For that particular case, you have to maintain the books of accounts and also have to audit that. Now coming to section number 4480, what they are saying, that if there is a business or profession, okay, and you have to, if there is a business, sorry, not profession, if it is a business, as business, and you want to give tax on the presumptive basis, so it will also available for you. It will also override all other sections of the PGBP. Now what are the conditions of that? It must be resident HUF firm except LLP. LLP is not allowed for presumptive taxation. And you have not claimed any deduction under section 10AA, 80 IA to 80 RRB, and you are not engaged in any businesses except 44 AE. Okay, 44 AE, you can engage in the 40, you should engage in any business except 44 AE, means 44 AE businesses are not covered here, because if you are covered in the 44 AE businesses, then you can give the tax as per 44 AE, and you should not carry on profession, because the profession section 8 44 ATA is available. For commission agent and broker, this section is not available, and for carrying on agency business, this section is also not available. And the turnover should not exceed your 2 crore rupees. If the turnover is is exceeding 2 crore rupees, then the deduction will not be allowable to you. But this limit of 2 crore rupees will increase to 3 crore rupees if your cash sales is less than 5% of your total sales of the total turnover. I hope this is very much clear to you. Now what is your income? The income will be 8% of the total turnover. Total turnover 8% will be your income. But I want to show lesser than 8%. Can I do so? Yes, I can do so, but for that particular case I have to maintain the books of account and get them audited as well. Now if my these transaction in the cash, sorry, if the transaction is in cash, then 8% will be the presumptive income. But my transaction is in the specified nature, means the transaction are conducted in the specified modes like check, or maybe the online modes, the UPI or the NEFT or bank transfer, account paycheck. If these are the conditions, then the 8% will not be applicable for me, only 6% is applicable. Now tell me, if I want to go out of the section number 4480, so I will not be able to come back for 5 subsequent years in 4480. And to show such lower income, I have to get my books audited, and I have to make books of account and get them audited as well. I hope it is clear. Now coming to the last section, 4480A, it is applicable for the profession only. Okay, it is for the profession only. What they are saying, that it should be resident, individual and firm except LLP. It should be engaged in specified businesses like 44AA. For 44AAC, all these specified businesses are covered for the profession. Okay, now if your gross receipts is up to 50 lakh rupees, then the presumptive taxation will be applicable to you, and this 50 lakh rupees will increase to 75 lakh rupees if your gross receipts, if the cash receipts are not exceeding the 5% of your gross receipts, and everything is same. Now the 50% will be your 50% of your gross receipts will be your presumptive income, and we will see that everything is already allowed to you. Now for the presumptive taxation under section 4480 and 4480A, you can pay the advance tax directly on or before the 15th March, not after the quarter end. Okay, then if you want to show the lower income than the 50% as well, then you have to maintain the books of account and get them audited. This is your whole chapter of PGBP. I hope you have revised the same thing very very in detail, and also recall every point in these classes. If you have not recalled something, then you have to mark that and get them study again and again, so that you can able to recall and revise each and everything. Bye, and let's meet in the next lecture. We will start the MET and AMT. Take care.